Simple pattern yields massive profit. Today I'm going to show you what that pattern is. Okay, here's a disclaimer. We're going to talk about a trading approach like you're solving a puzzle. Okay, to me that's what trading really is. It's solving a puzzle. The puzzle is well, which way is it going and where do we get in, right? We will trade without any indicators. We're going to talk about just price patterns only. We're going to read price charts the easy way. We're not going to talk about indicators, although you are certainly welcome to use any indicators that you like. Okay, so in this presentation, there will be no moving averages, no oscillator divergence. We're not going to talk about bands or channels. We will not talk about any fundamentals like news or reports, although those things are important to know the time that they'll hit the market, right? We will trade objectively using what I call trend strength structures only. Okay, that's my basically my basic angle, if you will, trend strength. Now these structures are actually the clues added piece by piece to arrive at an entry or an exit, right? We want a profit ratio. People always ask me this, about 2 to 1, and you want to win about 70% or more. If you have a high quality pattern, then you can achieve this. Trade profitably like you're playing a simplified version of Wheel of Fortune. Anybody still watch that show? I do once in a while. Vanna White and Pat Sajak. Okay, it's like solving a puzzle. Here's a puzzle. Now, imagine this is a puzzle which is similar to what you're trying to solve in a market. What is that word? Of course, you don't know. You want to wait for some of the pieces of that puzzle to be in. Okay, some letters to come in. Now, can you guess what this one is? It's still too early. It could be whatever, right? As you wait for more letters to come in, you have an idea what that word is. Well, let's say you have 3 letters and you guess. Did you guess Windows? No, you didn't, right? Well, what do you do instead? You wait for more letters to come in, right? You wait for more pieces to the puzzle to come in before you guess. That's the idea behind trading well from using the tools that I'll be showing you. Okay, as you wait for more and more letters to come in, now you know basically what that word is as more and more letters come in. That's what we're going to do in trading. We want pieces of a puzzle to come in and show up before we enter the market. So in trading, you don't need to guess prematurely. Get as many clues as possible to confirm before entering the market. Okay, trading a high quality chart pattern is like waiting for most of the pieces of a puzzle to be revealed. Now, what is the building block of all chart patterns? Does anybody know? To me, it's the measured move. This is a simple zigzag pattern. Now, these measured moves are really the clues for solving the puzzle. Okay, and here it is. This measured move is a simple pattern that can yield massive profit if you know how to use them. Okay, so here's a measured move. Now, in a classic measured move, we have this zigzag pattern going up, and this is a bullish measured move. We have higher lows, higher highs. C is higher than A, and D has gone above B. This is a bullish measured move. Now, it is said that AB equals CD. It doesn't always equal AB equals CD. Now, the measured move shows us trend strength. Number one, it shows us whether it be bullish or bias, of course. And because it shows us trend strength, we can answer this question: will the trend likely continue or reverse? Now, how do we get this to help us? Okay, well, we want to focus on the pullback at point C. Point C is the retracement, the BC pullback against the AB up move. So point C is very, very important because point C as a retracement against the AB move will indicate how strong this uptrend is. Okay, if you have point C as, let's say, like this, which is a what I call shallow retracement, shallow pullback, then where should point D be to have this balance out to the equation? Up there, right? This is called a stronger trend. And you can also look at it from this perspective as well. Here's a deep retracement pullback from B all the way down to C. Here's a shallower retracement, and point D should end up over there. This is very important to know. How deep is point C? Okay, of any measure move. Okay, going south. Here's a bearish measure move, and again, focus on point C because that's the retracement against the AB drop. So point C is the bounce against the AB drop. Now, if point A is up there, making point C sort of a shallow retracement, where should point D be before this pattern is done? Down there, okay? This is simply going by the AB equals CD rule. Now, AB doesn't always equal to CD. We will use that as a general rule of thumb to begin with, okay? But just to have some ground rules, this is how point C can be can tell us the trend strength. So again, it could be like a deep retracement at point C here. Here's a shallow retracement at point C. Where should point D end up? Down there. Can you see how you can do a breakout trade below B if you have a very shallow point C and ride it all the way down, like I did on the S&P today? So therefore, the deeper the retracement at point C, the weaker the trend strength. The shallower the retracement, the stronger the trend strength. Okay. Now, what do I mean by shallow or deep? Rule of thumb, 50%. Okay. However, if it's 55%, that's still shallowish. Okay. 2/3 or more is considered deep in my book. So there's some sort of gray no man's land area. But if it's less than 50%, it's definitely a shallow retracement. Therefore, the strong trend, whether you're going long or short. Now, here's something that I haven't shared before. I'm going to talk about right now. A shallow retracement, a shallow measure move, provides us with a preliminary zone to expect a market turn. That's right, a preliminary zone. And this zone, the reversal is likely to appear where price so-called has no business being up there or down here zone. Okay, I'm going to get into that a little later as I show you the diagrams, but let me show you what that zone is. Okay, here's an uptrend, right? Now what happens is if the market happens to come up over here, and let's say point C is shallow, less than 50%. If the market happens to dance around here and it gets below here for some strange reason, it has no business being down here, below here. So between C and A, somewhere in the middle, generally speaking, is a zone where you can expect a bounce. Because again, this is showing a strong uptrend because point C is shallow. What the heck is price action doing below point C? It has no business being down here. That zone, again, the zone is a pretty wide zone here. If I can, if somebody were to point a gun to my head, I'll say somewhere between A and C. But it could be one tick below point C. It could be double bottom point A. This is a zone where it has no business being down there that can be bought. Okay, and also if you're going down, the same thing happens. If price action somehow makes its way up over here like this, above point C being very shallow, this is a very, very unstable zone. Above point C up to point A, this zone here will give you a good opportunity to short as the original shallow point C measure move is pointing the direction down and is pointing a strong down because point C is shallow. This is the zone I'm talking about, okay? That's a zone that gives us an overbought zone. And I'll show you examples, like I said. And I'll get back to this concept in a second. Let's talk about how all chart patterns are constructed. All patterns are constructed from many measure moves attached together. You're not going to get just one zigzag. You can get a whole bunch of them, right? If you know anything about Elliott wave, he talks about how there's 5 waves, right? A couple of zigging and zagging. When you do that, you will form several well-known patterns, such as the butterfly, the head and shoulders, the cup and handle, flags and pennants. Now, I like the butterfly the best, okay? And head and shoulders is related to the butterfly, and these two are reversal patterns, right? Whereas these two are continuation patterns. In other words, the butterfly and the head and shoulders uh, tell us that the reversal may be happening. Now, isn't it, what if you have one of these patterns showing up at a zone where it has no business being? Think about that, okay? I mean, number one, you have a zone. Number two, you have a pattern that says it should reverse. How good is that? Now, these measure moves connect in one of two ways. Okay, what I'm doing, I'm going to tear apart every single likely chart pattern that shows up on any time interval chart, from a daily chart to a 5-minute chart to a 1-minute chart. These charts have measured moves in them, and they connect together. They're strung together, no matter what time interval chart you look at. Okay, now the first configuration is when you have a measure move going up, and this last leg here starts off with a new measure move like this. In something like this, you have measure moves in a series. Okay. Of course, we want to see how deep those retracements are to tell us whether this uptrend is a strong uptrend or a weak uptrend, or a weak uptrend that gets stronger, or a strong uptrend that gets weaker. I mean, what if you start with a deep retracement and then follow with a shallow, like we saw on the 15-minute chart of the S&P going down today? Well, that means, it starts out slow and it gains momentum, right, as you get shallower and shallower. Okay, so here's a downtrend. This one starts off with a new one. So if we have here, for example, deep, okay, and this is shallow, what that means is this downtrend is what? Gaining momentum, right? So you have a lot, you can learn a lot by how these bounces are from the red to the blue. But this is an example of two measure moves strung together in a series. Okay, let's show you an example. Here's a retracement. Here's another one. And this one also shows the example of this has a kind of a deep retracement. This one looks like it's shallower. What happens right here? Okay, it's following through. Okay, because trend strength is kicking in, if you will. All right, so these are just how the configurations are for two measure moves strung together. And of course, this can be any time interval chart. It doesn't have to be a 5-minute or 1-minute or a daily chart or a 60-minute chart. Any time interval chart, you'll have that. So this is how measure moves in a series look like. They're very easy. You see them all the time. It's just a bunch of zigzags strung together. One measure move followed by another with a common leg being shared in between. Now the second configuration is more interesting. I like this better. Why is that? Well, let's take a look at this uptrending measure move. Okay, look at this leg, the CD leg right here. Now, if this CD leg gets broken down into a measure move that looks like this is different than the first configuration. Okay, and the reason why is that the blue pattern has a measure move that is not in a series. Point B in blue is lower than point B in red. Okay, in other words, the CD leg in red is broken down to an ABCD, where this high here does not go higher than that high. Well, if this thing is unable to bust above that high, does this make this configuration a weaker or stronger setup compared to measure move in a series? It's a weaker uptrend when two measure moves are stacked like this. Okay, the blue one is nested inside the red one. Okay, so again, with point B lower in blue than the red, this makes it a weaker uptrend. Okay, so we call this a measure move within a measure move. The blue is inside the red. All right. Now, this happens to be what looks like a bearish butterfly. Okay, in fact, that's all a bearish butterfly is. Now, in a good bearish butterfly, we want point C to be deep, right? We want point C here to be deep. This red pattern here may be deep, may not be deep, but we want that inner blue pattern to be deep, and therefore we can short above here at point D. I'm not going to talk about how to do that for now, but that's a configuration. So a measure move within a measure move indicates weaker trend strength compared to measure moves in a series, right? Now, and if the inner measure move, like I said, has a deep point C, there's probably a reversal forming somewhere. Again, think about what this means if you have that showing up in a zone that we talked about earlier. Okay, now here's a bullish measure move within the measure move. The red CD leg broken down into this blue pattern here. Now in this case, blue point B is higher than red point B. This one unable to drop below this point, making this a weak downtrend getting ready to go up. And again, we want that point C here to be deep, the one in blue, the inner one, if you will. Okay, so very simple, right? This will make this a bullish butterfly below X. X is just that pivot low that we break below, coming off of blue point C. It breaks below B and that previous pivot low, which we'll call X. So again, a quick summary of measure moves working together. These are two measure moves in a series. Now this is a measure move within the measure move. Okay, so this pattern here shows a stronger downtrend that may continue. Okay, apologies to Elliott on the Elliott wave. I don't believe there are just 5 waves. There could be many, many more if you have these patterns strung together without a measure move within a measure move. This is a weaker downtrend, meaning it's getting ready to go back up. Again, these are two measure moves in a series. These are two measure moves. It's a measure move within a measure move. Okay. So let's take a look at some examples. These are just some diagrams. This blue measure move is within this red one. So up there is a reversal. And there's several ways to trade that reversal. Okay. There's a primary entry and a secondary entry where it actually works its way down. And you can see, just as a side note, how this downward move, this is a downward move. Why? Lower highs, lower lows is the definition of a downtrend, right? But notice how the second one is, again, shallower than the first one. This is the sweet spot of the move, right? The second one, A, B equals C, D. So you can actually trade the second one here if you're very, very conservative. That's where it starts deep and then gets shallower as it wants to go down and move, into the sweet spot of the down move. All right, let's go. Now, why is the butterfly pattern so powerful in trading market terms? Again, the butterfly is one of my favorite patterns to trade, especially with a confirmed butterfly. Okay, now why is it so powerful for trading market turns? Because it shows weakening trend strength in, again, 2 ways. Which 2 ways? It is a measure move within a measure move. That in itself, that configuration is a weaker pattern than when you have measure moves in a series, and you want to look for that deep retracement at the inner measure moves point C, which I always show in blue. Okay, once you have that, then you have a making of a possible turn in the market. Right. So again, I'm just going to show you some diagrams so you can quickly see what these things look like. This is a measure move within a measure move. Okay, and if this inner pattern has a deep retracement, it is a much better pattern. And I'll show you how that was the situation, in fact, upside down of this in the crude oil. Okay, here's an example. Here's a measure move. It is inside this measure move. It is deep. Therefore, you have a bounce. Okay. Now, this is similar to what we have in a series of these in the crude oil this morning. This is a measure move. The blues are within the red, but how's point C here in the inner pattern here? What does that look like? Is that deep or shallow? That doesn't look like it's very, very deep, right? So this one is not as good to short up there compared to something that looks like this. This is a deeper retracement. It has a better pull, if you will. So in other words, once price action tops here and then it starts doing this, it can pull deeper thanks to this guy being deep. Okay, now you guys have seen this before on all the charts. You just did not know how to break them apart and really find out what the rules are to tell you the story of what's going on. Okay. So here's an example of, well, this is gold just the other day. This was not a real confirmed pattern here, but you can see that this is a deep measure move within a measure move here. Now this is an unconfirmed, so this drop here, I don't think it's that big of a drop. Well, it's going to be a tough drop, okay? But this is gold just the other day. So, all right, let's go on. Let's talk about how to improve a butterfly pattern even further for more accuracy and reliability. Remember, what I just shown you there was a butterfly, a measure move within a measure move, in the inner guy being deep, right? Now, if you just Google butterfly chart patterns and all that, that's what you get. But for me, that's not good enough. We want to improve a butterfly pattern even further, okay? So your batting average will be much higher, and you can get a bigger move in your favor. Plus, you get more reliability and more accuracy in terms of finding out where that turn would be, okay? And how do we do this? We will use an overbought, oversold chart pattern, or use several chart patterns that show overbought, oversold at the reversal zone for confirmation. Now, what is an overbought, oversold pattern? Okay, now that's different than the overbought, oversold zone that I talked about earlier. That was a zone, but we're talking about patterns coming into that zone, and we wanted to show overbought, oversold. What does that look like? Again, we turn right back to the measure move. This is what an overbought, oversold pattern looked like. Going back to the good old measure move. Again, to me, all chart patterns are built from the simple pattern. So let's say you have a measure move that looks like this, where point C is deep. Now here, AB is equal to CD, right? But you'll know very quickly that a lot of times the CD leg is bigger than AB, right? I'm not going to get into the reason why, but if you find yourself having a CD leg bigger than AB and point C is deep, this is an overbought pattern. Where point D is way overdone, if you will, and it's coming from a deep point C, right? This will lead to a nice drop in the opposite direction. The deeper the point C is, the bigger the drop from point D. So again, you want that deep point C. Going the other way, here is a deep point C, and the CD leg bigger than AB. This will yield a bounce up. Again, this pattern is not to be used by itself in a vacuum. It is there to help the butterfly pattern to make it that much better. Okay. So what do I mean by that? Well, here's a measure move within a measure move. Everybody see that? Okay. I should really draw that in blue. This is a measure move within a measure move. This makes a standard butterfly buy somewhere around here. Okay. But how do we know it's not going to keep on running down and away from us? We want that confirmation pattern to show up to help us, okay? So what we're looking for is that CD leg to be broken down into something like this. That's right, the CD leg should be broken down to yet another measure move. And this measure move, shown in purple here, should have that situation that I mentioned earlier, okay? And that situation is what? You have purple A, purple B, purple C is deep. Again, how deep is deep? 2/3 or more. And the CD leg much bigger than AB down here. That is a overdone, oversold situation, the one in purple that is, to help out the butterfly. Okay? It does not take that much more work to look for an extra piece going from C to D. This is the last leg coming in to a buy zone. You want that to have that little configuration. Again, the more of those that you have, the better. Okay? So here's a bearish butterfly. That CD leg, shown in blue, needs to be broken down into a deep measure move within the measure move. Now, I don't trade the sugar chart, but I have a student who somehow likes to trade the sugar chart. And there was like, what, 4 or 5 of these in the last few weeks in the sugar chart on the 15-minute or smaller time interval charts. Okay. How about this? What does this look like? This is not a butterfly. Why is that? Because we don't want to short up at point D. This pullback at the blue BC, that's too shallow. It doesn't go deep enough. This one is also very, very shallow. This is not a reversal at point D. Okay, again, trend strength is too strong to the upside. Okay, definitely not a butterfly. How about this? That's also very bad if point B, shown in blue, has the bullishness to jammed above point X. Okay, in fact, this is a continuation to the upside trend. Don't short it, right? So that's what the butterfly looks like. Again, I'm not going to get into the head and shoulders or the cup and handle, okay? But flags and pennants are interesting. I'm just going to touch upon this, which is similar to something that I traded today. The flags and pennants are continuation pattern, right? Continuation patterns. And here's one on the crude oil just recently, okay? What I'm looking for here, look at this. From this high, we have, okay, what does that look like? How deep of a point C is that off of this high, which is right at the new year, okay? This bounce up against the AB drop isn't very, very deep, less than 50%, okay? And then later on, as we speak, we have this little pattern over here. How's this bounce? Is that a deep retracement or a shallow retracement as we make new lows? Well, there's also shallow, right? As you can see, we have a lot of shallows here, okay? This is a continuation pattern here, and this is something that is, well, if you break down a flag and pennant, it's a lot of these type of shallow stuff. In other words, for a good flag or a pennant, you want to have a big, long flagpole. How's that? Okay, that's what makes it a shallow retracement a pattern, if you will. Okay. Now this is a daily chart of the S&P. Okay. What does that look like in terms of a retracement off of this high in late last year? From this high coming down to here, how big of a bounce is this compared to AB equals C? Actually, this is not very, very deep. 50% is about here, okay? This does not even bounce 50% before it loops right back down, which means what? That's right. That's the direction that it wants to go after that made a move below here. So that these last few days, think short, right? So again, this is just simple. You could call this like a flag, but it's not really a flag. Conversely, on the upside down version, how deep is this retracement right there? It did not pull back to any degree. It wants to go up in a hurry, right? So what happens? AB equals CD, right? So right about here, after you loop right back to a shallow, you're gonna have this to work with. This is a daily chart. This is back in October. So once that happens, these few days, these several days, think long. Make sense? Again, we're talking about a simple chart pattern here. So what do we look for? We want to look for deeps off the highs and shallows off the lows, or vice versa. Okay? Deeps off the highs, shallows off the lows, or shallows off the highs and deeps off the lows. Let me just draw some diagrams to tell you what I mean by that. Let's say we're dropping. We have deep off the highs, deep, deep, and deep. Okay. Is this a strong downtrend or a weak downtrend? Think about that, right? And then on the way up, we have shallows. Okay, let me stop right there. This thing went down and it came right back up. Now, where are you favoring the direction of this pattern? I would think it's up, because off of this high we have deeps, okay? Off of this low we got shallows. Well, it wants to go up a lot more enthusiastically than when it was going down. It was going down reluctantly. Okay, that's what I mean by deeps off the highs and shallows off the lows. How about the opposite? Okay, shallow off the highs. Okay, and deeps off the lows. It goes up here. Let me do another color. It moves up here, drops down. It moves up here, it drops. Now this is a pattern that you should get ready to short because it has a heck of a time trying to make its way up, whereas it's dropping nice and clean, right? So this is where you see this to go short and then resuming shallow off of this high. You have a shadow off of this high and shadow off of this high. So in general, this type of pattern, again, one direction it is steep and one direction it is shallow. Once you have that, you have a general idea as to which way the bias should be. Should you be leaning long or short? We do this on a larger time interval chart, and then we can go down to a smaller time interval chart in which to trade that in that direction. Okay, so what you can do is learn to read charts with confidence, know why a pattern is of high quality, and you can make money consistently trading. All right. Now I'm offering one-on-one mentorship. Okay, I'm opening this up. I don't normally do this. I'm only taking a few selected students. Okay, and the one-on-one mentorship, you will learn all the rules to using measure moves to objectively determine trend strength, right? And you learn the trend strength rules to trade confirmed reversal patterns such as butterflies, trade confirmed breakout patterns if you like, okay? And you want to go look for high probability retracement zones, which I'm going to talk about in a second, okay? And you also know preliminary targets, where to place stops and how to manage trade. Managing trade is simply a matter of reading trend strength as the market unfolds, okay? And after that, you'll learn how to look for and understand unusual looking butterflies, how to trade ugly head and shoulders, how to know whether there's a hidden cup and handle. And then, of course, you want to look for the length of the flag poles. We talk about that. The longer the flag poles, or the pennant poles, if you will, the more it can follow through. Because again, the longer the flagpole indicates what? Shallow retracements, right? And because the flag and pennant is a breakout pattern, you want that to have a lot more gas in the tank to go in the direction of the trend. Okay. You also get free bonuses if you sign up. Okay. The first free bonus is you're going to get my recorded 10-week butterfly course. I'm offering this, and this is an advanced butterfly course that tells you how to stalk a butterfly, how to apply confirmation patterns for safety. Now, when not to trade butterflies. Okay, let me give you a hint. Don't fight another bigger butterfly going in the opposite direction, right? How to enter the order, initial stops, managing the trade, secondary entries if you don't want to take the primary entry. You can also trade butterflies without fibs, okay? Back-to-back butterflies, my favorite. This is my favorite pattern. And then personal secrets to day trading profits. Okay, so this is a 10-week, a 10-part butterfly course that's recorded. I did that earlier last year, I should say. Okay, this is a $997 value. Now you also get a second free bonus, and that is my Superstructure ebook. Okay, I wrote this ebook a few years ago. It actually tells you what these measure moves are and how to trade them, and more importantly, there's a thing called a time range, which I didn't mention. Very, very important that you can use as we look at all the patterns that make up a good trading pattern. There's also the video companion to those chapters of the ebook. Okay, so again, these two things are available. Now, if you want to sign up, you can call Frank at Pacific Trading Academy. Here's the phone number. Or if you have any questions or comments, you can contact me directly at ken@superstructuretrading.com. Okay. Again, I'll show that again here. Frank at PTA, 1-800-339-8588. Or you can contact me directly. So again, we're going to show it has no business being up here or down here type of zone. And you can see how these things can be, how these things can react, okay? So here's a measure move going up, okay? Now this is a shallow retracement, isn't it? Coming off of this low, right? Here's a deep retracement coming off of this high, right there, okay? The CD leg is a little bigger than AB. Well, below this has no business being down here below this low. So over here, there's a little bit of a bounce, okay? That makes sense? So from here, we got deep, shallow, and shallow. This is shallow and that's shallow. This actually had a chance to get above there and above there. Has no business being up there. So the minute it zigs and zags, or this is a 15-minute chart of the S&P today. This is going south. Now you don't have to catch it earlier on. You just want to make sure that it is in a zone that it shouldn't be at. Okay. Now I talked about this earlier here on the 15-minute chart. This is a medium, well, not medium, 50% retracement here. This is a ridiculously shallow retracement here. The moment it breaks below there, right there, it is right about to go off a waterfall, going off a ledge, if you will, because it was deep and it's very, very shallow. This trend not only is going down, is accelerating to the downside. Okay, but let me show you more of that zone, what I'm talking about here. Let me go back to the crude oil and show you some of these zones. Okay, let me go to the 15-minute chart on the crude oil. Okay, and here we're going to talk about the drop here. This drop from here to here. Let's talk about the retracement. Oh, there's one that's not too deep. Bar to bar, bar to bar, bar to bar. This was very shallow. Okay, now this move here had this and then way down here. So once we get above here, you should not go above there. And it dances around. It did get above here. So right above here. Now I'm not talking about here or here because we're not talking about how it gets up there. How it gets up there is very important. But the key is that this is a, let me rephrase it this way. We off of this high, we have what? That's not very deep. This is very shallow, okay? Off of this low, this is not that deep. This is deeper, deeper. This is not that deep. This is deep, deep, deep. We have a lot of deeps coming up over here. Once this thing rolls over like this, which is what happened right before the inventory report of crude oil, this followed naturally, okay? So you don't have to catch this high here. You want to see this roll over. And once you roll over, this is today's price action. That's the beginning of the beginning. Let me go down to a 5-minute chart to show you, and that's this. This is what we see here, okay? Right here. This is deep, that's shallower. This is what we get. So the zone is very, very interesting, very, very powerful, okay? Because the zone tells us that it has no business being up there or down here zone. All right, so I'll give you another quick example, then I'll take some questions for everybody. So again, deeps off the lows, meaning a choppy chop ride up, is indicative of a top coming up. If that upward move that we chopped up to is coming up against a bunch of shallow retracements, okay, and that's the key. That's the real key. Let me go down to a 5-minute chart to illustrate this point here. Okay, 5-minute chart, S&P today. Here's a retracement here. Here's a shallow retracement right there. That's shallow, isn't it? Okay. Now this thing went above here. Has no business being up there, especially coming off of a deep retracement right there. So right here is unstable. Down you go. Okay, because it went above here, coming off of a deep retracement. Deep retracement shown in blue. Okay, against medium and then shallow. This is a shallow retracement in a series, right? So when this thing went above there, you can short this in that zone, stop above there. That makes sense? So we're coming down strong, and then you can see how the retracements here this is deep, and oh, very shallow here. Down, 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 down. So again, acceleration means shallow, shallow. And again, you don't need to use like, moving averages or anything like that. I'm just looking at these price action by itself. All right, I'm going to take some questions here.